The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. If you have any questions at all, feel free to give me a call. You can reach me right here at 877-927-6648. And I'd be happy to take any questions you have about Nadex, binaries, the box spreads, futures, forex, stocks. I can pull them up for you. I can look at deviations on them. You know, just a lot of different ways that I can help you out. So good. If you got any questions, I'd love to hear from you. Now, go ahead and check out what's going on in the market today. And I'll go ahead and post over on Tiger TV the deviation levels for the day. So that way you can be checking them out if you're in the den or on the TV. And I want to go ahead and look at where is the market trading at right now. And we always do a current market wrap. So that way, if you're out there on, TFNN.mobi listening in, you just want to sort of hear an update of the market, then I make sure I get you up to date. We got the S&P right now down 6 points. We got the Russell down 7. We got the NASDAQ basically just flat on the day, up 2 ticks right now. We got the Dow down 21. And we got, copper is actually one of the few movers today. There's just a few movers across the board on the futures. Copper's one of those, and it's down almost 1.5%. We got gold down $9. We got silver it's down almost 1%. And NASDAQ, natural gas over on the energy side, it's down 0.031. That's almost 1%. And then we got oil down 67 cents. Now, corn and soybeans moving like crazy. We got corn down 19 on the day. That's a 2.5% move. And we got soybeans down at 28 points on the day. That's nearly a 2% move right there. Looking at our currencies, we had the Aussie dollar down 40. We had the pound dollar up 35. We got the U.S. franc down 19. U.S. Canadian up 15. And U.S. yen down, or actually now up 2 ticks on the day. Pretty flat right there. And so let's go ahead and check out a few things that we got going on before we get into that. It looks like we got a caller right here. We got Dawn from Odessa, Florida. Hey, Dawn, you there?
I'm here, Darrell. Thank you for taking my call.
Oh, yeah. How's it going?
It's going okay, but I got a question for you. I had the demo account with Nadex for a couple of weeks, I guess it was. I'm so busy, I didn't have time to really mess with it. Yeah. The first thing I did, I was following along with you on the broadcast here, and I messed it up because it didn't work the way I thought it would. And so my problem really is, now I looked at the video on all the different parts of the website there.
Yeah.
So I know about traversing the website. What I am unfamiliar with, and maybe these are generic terms for futures trading or whatever you call it, because I don't know a lot about futures. I just do stocks and ETFs and that sort of stuff. I don't know what binaries are. I don't know what bull spreads are, or none of that other stuff that y'all got for sale there, and how they work.
Okay.
So, do you have literature about that, or is there a video on that kind of stuff, or is there some kind of training for that?
Well, yeah, we actually just did a live conference in Tampa that Nadex put on for free.
I like stuff that I can look at my own leisure as time permits.
Well, let me show you what's coming out, and I believe this is done, so I think it's getting launched this coming week. Okay.
Okay.
And if you're watching online, we actually are. There's going to be all these tutorials built in.
Okay.
And so it's going to go in. It's going to walk you through step by step. Exactly how they work, how the scanner works, how Nadex works. And it's going to go into basic application and strategy on Nadex and the bull spreads and examples.
Okay, so
it'll also go into like bull spreads and binaries, and of course I cover them right here. So anytime you have a question like that, how does this work? You just let me know. I'm right here to help you out.
Okay. Well, I don't have my demo account anymore.
Okay. Well, I'll give you a tip on that one. All right.
Okay.
Email dan.cook@nadex.com.
Hang on. Let me write this down.
Dan.cook.
.cook, C-O-O-K.
At nadex.com, and ask him for an extension on your demo account.
Well, it's already over.
That's okay. Just email him and ask him. He can add it. He's a great guy.
Okay.
Yeah.
I'll give it a whirl.
Yeah. And then but that'll get you up on that. And then so get your demo hook back up. And are you available on Monday? If you want to give me a call, I can actually do a tutorial with you right here live on the radio. I can show you on the screen how the binaries work.
I am so busy during the daytime. I have a chance to listen once in a while, but I hardly have time to even do what I do. So
okay,
that's
well,
why
what I do
whenever
is
I get in between the kind of work I do, I've got little breaks here and there that I turn around and look at my computer and see what's happening. And then I can have a chance during those periods to look and see how to do things.
Well, definitely check out our archives. Also, get your account hooked back up. I know we're actually set up to. I'm going to be doing like 4 or 5 webinars with Nadex here over the next like month and a half.
Yeah.
So you can, and those are at night, and then they're also recorded.
Okay.
So, but you can check out the archives of this show because sometimes I go through and I just do the whole show on like literally a tutorial, and then the webinars, the Nadex YouTube channel, things like that, all have a ton of education on the binaries and the bull spreads.
Okay. Thank you very much, Darrell.
You bet.
Bye-bye.
Hey, thanks for calling in. You bet. Awesome. Well, appreciate that, Don, for calling in. And let's go ahead and check out right now. We want to look at our fundamentals and see where all the fundamentals are sitting at. And if any of y'all didn't get that again, once you got your demo account in and you're wanting to extend that demo account, especially if you fund it with $100 in the live account, again, that's think of it as a deposit, whatever, because it is a deposit. You can pull it back out. But email dan.cook@nadex.com. He'll help you get hooked up and help you take your basically get that demo account, because you want to have a demo account even with a live funded account. You want to have a demo so you can try out new things. You don't want to always try. It's not necessarily the best idea to try new things with live money. So that can be a very expensive education. So make sure you go on there and you actually know how to do the trade, how to push the buttons, how it works before you're just playing with the live money. And Dan will help you out. So anyways, let's go ahead and check out right now where we're at over here on the fundamentals for the trading day and what happened today. So, well, we had a few different things come out. I'll check out last night. I want to say there wasn't anything major coming out. Nope. Didn't really have anything big come out last night. As you know, the IMF meetings have been going on yesterday, today, tomorrow. And that, of course, is affecting a little bit of everything. And we had the PPI come out this morning, a rise in the PPI. That's the change in the price of finished goods. Basically shows inflation. So, meaning things cost more. Well, I mean, gas is like, hitting $6 a gallon in some areas in California right now, so no kidding. But the PPI is actually about finished goods and services sold by producers. And it's basically, it has a bigger impact than the CPI data because it's, they're very correlated. But it's a very high impact announcement. So just want to make sure you're aware of that. That did come in a little higher. That came in at 730. And we can look and we can always pull up a chart. I like to look at charts and see, to sort of show you how the market was impacted by a specific news announcement. So we can hop over here and we will look at the futures. And we can see right here, we got the S&P moving down a little bit, but here at 730 came in, and the market did not like that inflation had gone up. And the core PPI as well came in, but the PPI is being the bigger number. Core PPI was a little bit lower. But the PPI is the more important number, and hey, inflation. They did not like the inflation, and that did have a negative impact on the market itself. And then if we look on over and go a little bit further in the day, we got the University of Michigan Consumer Sentiment Report, and it's basically they survey 500 consumers versus like manufacturers, like a lot of the other reports, and ask them how they feel about their future and their economic condition. And surprisingly, it came in at 83.1. So I'm not quite sure which consumers they interviewed, but they were expecting 78. And let me see, the last time it was actually that high. I'm looking back like years right now. Okay, and let's see, June. Okay, July. I'm literally just trying to find the time it was that high. We got it all the way up at 83.1. Looks like September of 2007 was the last time that report came in that high. Okay? So there's some people that are in the market that shouldn't be. That's all I got to say. So that means they feel really good. Probably QE3. I don't know. Which is great because that means they're holding on and they're buying and we're selling to them. But anyways, you don't want to be the consumer. You want to be the supplier when it comes right down to it. And but yeah, came in at really high, and they're smoking something over there at UOM or something. I don't know what's going on. But 83.1. I can't believe that. It literally hasn't been that. Maybe that's the ultimate bear signal when you have that coming in that high. If we back up, check this out. We look at the S&P, and I go back and I look at, I don't know, what, weeks? Maybe months? Yeah, we'll go to months. And let's check out last time that report came in like that. We were getting readings in the, the 80s. Let's see here in June. Let's see, this is what? That was September 2007. So we go right here. And, it's sort of interesting. Last time we were at 83, we basically peaked out within a month, and then we crashed. So, just saying. That's just September 2007, and then October 2007, as everybody knows, the big decline started. In October 2008, it just went full throttle. But yeah, so you got people being overly positive, and that's not a good sign for the market. All right, so that's how to read that one. Everybody thinks it's going up, and when they're that overly optimistic, that's very, very bearish. All right, so next thing we got, I know it's so weird. It's like basically when you start seeing all that stuff out there, then that's when you know, hey, it's time for the market to stop rallying. Let's go ahead and check out what else we had. We got Lacker decided to come on and do a little speech. This FOMC member there, and he went in and talked about the challenges to economic growth at the University of Virginia. And, his name is, again, Jeffrey Lacker. He's the Federal Reserve Bank in Richmond, obviously in Virginia there. And he's been a voting member for the last, I guess, 3 terms, 06, 09, and 2012. And, that didn't have, I guess, just a massive impact. We can always drill down and look at. It's always interesting, like I said, to hop down and just look at market events. And we'll see here that 11:35, which would be, I want to make sure I'm looking at the right time there. Yeah, okay, so 11:35 just came in. Not any kind of massive impact at the moment. It's pretty flat. Not a big surprise there. What we do have, and I'm not even saying so much to make a play on this. I'm just going to be watching for it. But it's important news. Is we got the federal budget balance report coming out today still. And that's going to come out at 1 o'clock Central, 2 o'clock Eastern time. So here in about 40 minutes. And, usually you would think not that big of a, thing. It's from the Department of the Treasury, but it's the difference in how much money the federal government's brought in versus how much they're paying out. Okay? And why is that so important? Well, of course, we're going to hit our debt ceiling before the new Congress, if the new Congress, whatever, is in place. And they can't agree on anything. Stay right there. We'll talk about this a little bit more when we get right back from the commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. And what we're going to do is I'm going to go a little bit into this federal budget balance report, a wrap up on the fundamentals, and based on our last caller, Don, I'm going to go ahead and do a quick tutorial on spreads and talk a little bit about them and what they are and how they work. So I'll do that right after we get on the next segment. But what I want to do right now is we'll start off and look at, we got the federal budget balance report. And we're coming up, not only do we have the fiscal cliff and Congress that, as we all know, can't agree on anything, and an administration that isn't willing to work with a Congress that is divided. And, I don't care who you want to blame, whatever, it's just not working. And so at the end of the day, we have major problems coming up. And that's a lot of the uncertainty we're seeing in the market right now, is this ongoing, what's going to happen next. I mean, we're only a few weeks away from the election, okay? And, we're only 2 months away from the upcoming, end of the year fiscal cliff. And we're, a matter of 3 to 5 weeks away from actually exceeding our deficit, needing to raise our debt ceiling. Or cut our spending, one of the two. Either way, we're going to have to raise our debt ceiling just to deal with it. And so you have all these companies trying to figure out how to cover the insurance stuff that's going to affect more and more and more. And, there's some good stuff about the insurance. There's some pretty jacked up stuff about the insurance. Like one of the things is we found out with our, I just have a new baby boy, a new son, and his name is Judah Leonidas Martin. And but there's something really messed up. If you're not on a group policy, okay, or your child isn't at least 3 months old, with the new law, okay, right now an outcome of that is you can't get insurance for your kid. So either you have to be very poor, and be getting government medical help, or you have to be working for a company as an employee. But if you're trying to do your own thing, there's nothing out there for individual children policies. Now, my daughter, she is on an individual child policy. It's only, like $100 and something. Pretty cheap. And, but what they did was they said, hey, there's no cap on how much the insurance has to pay out. And there is literally, no way they can deny anybody. So they said, well, we got a solution to that. We just won't take any new clients. And so you literally can't go get a child. If you have a newborn coming up, you can't get them signed up. And it's just so it's a little bit, nerve-wracking there having to deal with that. And, it's just some of the things that haven't been obviously weren't thought out because the thing wasn't read before it was signed. They had to sign it before they could read it, as we all heard. And, just some messed up stuff out there. So we got that going on, and that's affecting all the uncertainty. We have the fiscal cliff coming up, and, think about the fiscal cliff. If the income taxes or the, capital gains, all that stuff goes up, 5, 10, whatever % next year, automatically, well, then what would you do if you're managing money and you've made millions and millions or tens of millions of dollars right before the year's over? You'd close your positions. Otherwise, you're going to take a 10% loss the next day. Okay? So at the end of the year, if they don't have this thing solved, and if there's not a lot of confidence based on the elections that it's going to be solved, where they're going to do it retroactively, then all these big gains we've seen happen recently are going to need to be closed out unless people want to give up 10% or whatever of their profits in taxes. So that's a major issue. And so this federal budget balance report is going to say, it has to do with the other issue, which is the debt ceiling, and how soon are they going to run out? And what games can the Treasury play? And, what games can the Fed help out with? And, I'm sure there's some games that Geithner, there really not much the Fed can do about it. But, Geithner will probably, I'm sure, do some sort of creative thing to try to buy, a couple months, ideally, until the whole, the new electorate, whatever, not electorate, but the newly elected officials, whoever they may be, are in, and hopefully they can agree on something quickly. And ideally, they'll come together and at least, just do a 3-month extension or something. And I know none of them like to, agree to extensions, and they all talk about all this stuff. And I think they're trying to see if they can get away without doing an extension until after the election. But then after the election, the ones that lost, what's their motivation? They don't care. So, I don't know. It's just, it's very unnerving. But this report's going to see how much closer we are to that, how big of a deal is that before the elections come up. And, looking over the S&P right now, we did have some pretty strong moves down right there. Not that it moved down far, but it did move down with a volume, as you can see on the chart. And it's going to pull back. It's going to pull back on lighter volume, and that is bearish for the day. So the market, I think, is going to wait here, and it's going to check out over the next 30 minutes and see, what comes out of the upcoming report. So hold on right there. We're going to come back. I'm going to do a tutorial on the spreads and show you how they work. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. What I'm going to go ahead and do now is do a sort of a quick run through and a tutorial on what are these Nadex spreads that me and Steve and Tommy are always talking about. All right? So I've got a little presentation put together for you here. And let's say you're looking right here at the spot FX. All right? And let's see here if I can make this. I do it one different way, and then we'll get it going. Yeah, I'm not quite sure how it's going to work out, but we'll just do it. So let's say you're looking at this. Now, you can sort of cheat and see what's going to happen next. All right? But let's say you're looking at this and you see this trend line, and so you think it's going to go down. And this is sort of an on the spur of the moment presentation, but I just want to help y'all out. And so you see this trend line, you think it's going to drop, and this is what happens next. So this is your fear, but you want to, you don't know how much higher it's going to go, if it does go that high, all that. And so you're like, hey, if it bounces off this trend line, I'm going to go short. And here's where it went last, so I want to have a stop somewhere up here, and you do put a stop up there. Now, as you can tell, what did happen is it did go up there, all right? And you got stopped out of the trade. And that's, how often does this happen? I mean, it happens constantly if you're a trader, right? It's very easy to get stopped out. And if you will use these spreads, that trade right there will never happen to you again. Okay? I'm not saying that, you won't have losing trades. What I'm saying is you won't ever lose simply because the market stopped you out of a trade. Okay? So let me show you how that works, because that's what the spreads do. It allows you to do the same trade that the FX trader is doing on the spot market. You're doing it on the Nadex FX spread market, and you're both doing the same trade. You take on less risk. You put up less money. You don't get stopped out. He does. Exact same market conditions. He ends up losing. You end up winning in this example. So just to show you this. Okay, this is called the whipsaw elimination strategy. And on the whipsaw elimination strategy, I go into Nadex Spreads basically show you how to eliminate whipsaws in your trading. And I go into, basically, what are Nadex spreads? Well, they're just like, buying or selling anything else. It's a trade where you're basically saying the market's going to go up. If so, you buy the spread. Saying the market's going to go down, you sell the spread. It is that simple. Okay? And it basically just allows you to trade the underlying markets with limited risk. So, buy or sell. You're used to that already. Okay? I like to call them box spreads. They call them bull spreads on their website, but they're not bullish. They're bullish if you buy them. They're bearish if you sell them. So maybe bull-bear box spreads. And the reason I call them box spreads is because when you draw them on a chart, they look, basically like a box. So what is this spread? What are these spreads? They're not call spreads. They're not put spreads, vertical spreads, horizontal calendar spreads, etc. They're not, future spread trading. They're a unique spread. And they have a floor and they have a ceiling. Okay, and that's the strikes. All right. And so if you're looking at that, and let's say you have a floor and you have a ceiling like 1.20 to 1.250, then that's your floor and your ceiling. And the difference between your floor and your ceiling is the spread. So pretty simple there. And so the market go up and down, and move back and forth. And so when you're looking at that, there's 500 pips of spread value there. And in Nadex, every pip or tick is the last increment quoted. It's always going to move in single digits, like ones. So like 0.0001 or 1 or whatever. So you don't have to deal with like quarters, like in the S&P 500 futures, it moves in quarters. Well, on the S&P 500 on Nadex, it actually moves in 0.1. So it's actually pretty cool. Makes it really easy. Every single digit, last digit is always the last one, and it's always worth $1. Since there's 500 pips in this, then it's a $500 spread. And when you understand that, then that basically, you got a spread down. Okay? So now understand, if you want to sell the spread, you want to go short, you can't lose any money above the ceiling, and you can't make any money below the floor. Now, you're talking 500 pips. Okay? So don't worry. And there are wider ones, and there's also ways to uncap the spread and things like that I talk about. But let's just look at this right here. And so if you sell the spread at 1.2490, then that's a 10 pip difference, right? 250 is the ceiling. You sold at 2490, and you can't lose money above the ceiling. And you can't get stopped out. You're still in the trade even past expiration. So if there's only 10 pips right there, what is your risk on the trade? $10. That's it. All right? And if every pip is worth $1, $10 is your risk. And then if it moves down, then there's 490 pips of profit potential. Again, potential. Now, this is where deviation levels come in, okay? So that way you can figure out what your expected payout is. And this is sort of just a broad example to show you. But $490 of profit potential and a $10 risk, a 10-tick risk, okay? And that's it. It's that simple, all right? Now let's flip it around. What happens if you buy the spread? You can't make money above the ceiling unless you use like one of the other strategies I talk about. You can't lose money below the floor. You can't get stopped out. So if you buy it at 10 ticks above the floor, that should be 1.2010, okay, 10 ticks above the floor, then you bought it at 1.2010, and the floor is 1.2000, and therefore you only have 10 ticks of risk, therefore you have a $10 risk, and on that $10 risk, you have a $490 profit potential on the trade. Well, basically, the difference where you buy and the floor, or where you sell on the floor, then that's going to determine what your risk and reward is. And by the way, on their tickets, when you open them up, if you hit buy or sell, it'll automatically show you, okay, immediately where the buy and what the risk and the reward is. But if we're going in, we're looking at it, you can't lose money at all. But you also have the ability to close out any time before expiration. You don't have to hold it to expiration. So you can open and close at any one of these points. You could buy, sell, buy. You can even buy when it's below the floor, out of the money, and it goes up. You can sell it. There's a lot of different times you can buy and sell, but you don't have to wait till expiration. All right? So now let's look at what would have happened on this trade, on the two traders. So we know what happened to this spot trader. He got in, he went short, and basically one of the worst things that happens in trading, So he went in and he sold it. He put up $3,000. He had a $650 risk. Market went down, boom, spiked up, kicked him out of the trade. And then what happens next? I mean, that's bad. This is worse. When you're right, but you just didn't have time to be right because you got kicked out of your trade. Whereas if we go over and we look at what happened to the Nadex spread trader, he went short, okay? But he had the buck spread on. And when he went short, he sold 10 of them, and he had 35 points, maximum risk on each one, so he had a $350 risk and a $350 margin, all right? And market spiked up against him. He was still in the trade, down but not out, and was actually profitable on the trade. And they gave a profit of $760 on a trade. If you put the two side by side, you can tell a major difference where one risked $650, the other is $350. One put up $3,000, the other put up $350. The FX spot trader lost $650, and the Nadex spread trader made $760. So that's a quick summary for you on the spreads and how they work right there. And then the other piece is a lot of people try to figure out where are the strikes, where do they come from, okay? So on the strikes, what they do is they put out, basically they start at 6 o'clock at night, and then they'll also have like 8-hour ones, like they start those up at 7 o'clock in the morning, and then they'll also release one every hour that are 2 hours long. And so basically wherever the market's at, about 15 minutes or so before the spread is scheduled to trade, so let's say it's going to start trading at 7 a.m., then what they're going to do is they automatically have a set width on the spread, okay? And so let's just say, for instance, that set width on the spread is 250 pips. Then they're going to put 250 pips above the market, 250 pips below the market, and then they're going to have one that's 250 pips like straddling the market, so 125 above and 125 below. So there actually is a method of the madness. It's not just random strikes and random boxes. So they're always the same width for that amount of time. And then the other thing to know is the shorter the time frame, the smaller the box. The bigger the time frame, the bigger the box. So you can go in and get these, shorter boxes, which is great because it gives you a lot of profit potential. It always helps you find one around the floor ceiling because if the market's moving up, you can find a new spread. And that is close to, like if you're buying and the market's moving up and you want to buy, you obviously want to buy as close to the floor as you can get. If you're selling, you want to sell as close to the ceiling as you can get because that lowers your risk. And, people go, well, what about the liquidity? Okay, well, understand, the price is not driven by demand of the spread. Okay, the price is driven by the underlying market. So if Forex spot goes up, the price of the spread goes up. If Forex spot goes down, the price of the spread goes down. Same thing on the S&P, gold, copper, silver, oil, corn, soybeans, the DAX, euro, yen, whatever, okay? And there's market makers and there's other traders on the other side of the trades, and those market makers are actually required by their contractors to make a market. And so they give you a quote of, hey, we'll take this many at this price right now at this second, and I mean, you're anywhere from 10 to, hundreds of contracts, okay? And I've taken the entire book, and I've seen it get refilled right away. But the price is driven by the underlying market, and those market makers are constantly making money. Trust me, the exchange wants you to get your orders filled because they only make money when you get an order filled, okay? So they want to basically have your orders filled or settled out, so that way they can actually make something, because if you can't get in, the exchange can't make money. So they want to make sure they have market makers and enough traders where markets are getting made. That's the whole point of a market, of an exchange, is so trades can be exchanged. And I haven't had any issues getting my fills. So I go in there. I mean, the only time you might have an issue is just like any other market if you go in like right before a news announcement, okay? So you can, things like that. But I really haven't had, I think maybe one time I saw an issue with a news announcement ever. And I trade these things basically every single day. Nadex is a derivative exchange. Like we said, it's derived from another market. And, if you think about like a mortgage or a homeowner's insurance is derived from a house. Mortgage insurance is derived from a mortgage. And a mortgage itself is derived from the house. So there's like 3 levels of derivatives, right? Homeowner's insurance on, the actual house burning down, possibly, right? Mortgage insurance based just on a mortgage, and a mortgage itself being a derivative of a house. So you want to know where the prices come from when you're trading these spreads. So to take a quick recap on that, they have the Wall Street 30, which follows the E-mini Dow futures. Okay, it does not follow the diamonds. Doesn't follow the DJX index, okay? Follows the E-mini Dow futures. Yeah, those are similar, but they're not the exact same. And if you need to know where to get free futures data, okay, for charting, and you want to see live data, free data, I actually do have a deal set up where you can get free access to live futures data. Just give me a call. I can let you know FCM that can hook you up on that, and they'll give a free trial, no deposit required, get you going. Dean Martin at TFNN.com. If anybody needs help on that, just let me know. But on U.S. Equity indices, the Wall Street 30 follows the E-mini Dow futures. And on the U.S. 500, it follows the S&P 500 index futures. The U.S. Tech 100 follows the E-mini NASDAQ, not the Qs, okay? The E-mini NASDAQ 100 futures. And the U.S. Small Cap 2000 follows the ICE Mini Russell, not the RUT and not IWM. Again, you could use these, you can look at them, but they'll be different if you look at an ETF or an index or a future. There's always going to be a difference in price, and that's a whole different lesson. But you just want to know what is the price derived from. They also got the FTSE, which is following the Life FTSE's 100 index futures. They got the Germany 30 following the Eurex DAX index futures. And they got the Japan 225. It's following the SGX Nikkei 225 index futures, not the CME Nikkei 225 index futures. Okay. Also, you want to make sure you're looking at the the contract month, the correct contract month. They actually have it in the platform. It'll say like Japan 225 September, okay, or in this case it'll say US 500 December right now because they're following the December futures contract. You always want to make sure you're looking at the right future and the right contract. The markets, they're not denominated in US dollars. So some of these markets aren't. So they can't be used for necessarily direct hedging, but you can use them with the master spread for hedging. Okay. So I talk about hedging where I combine the spread with the underlying market as one of my favorite strategies. And so if you want to do it on a market like, these markets are in yen and, euros and things like that. So if you want to do the hedging strategy, you need to do it with the master spread, which actually is easier because you have everything in one account anyway. On the other markets, you can easily hedge. And we actually built the scanner to account for all of this, the master spreads and everything. And then over on the energies, you got crude oil, and following the NYMEX crude oil futures contracts, CL there. You got natural gas following NYMEX natural gas futures, okay? Those run every calendar month. You got gold, which is following the gold futures and the full-size gold futures, all right? Not the minis, not the GLD fund, okay? You got silver following the silver futures. You got copper following the copper futures. On corn, it's following the corn futures. Pretty simple. Soybeans following the CBOT soybean futures. You also want to make sure you have the right exchange, but you can get almost all of this stuff right here directly through a Globex data feed. And like I said, I can help you out with that if you need help on that. Now, important, spot forex, not derived from futures forex. They are very similar in price, but futures forex has the interest built in for the carry trade itself. Okay? And whereas spot forex doesn't have the carry built in because they settle it up every night, however they do it, depending upon the the broker you go through. So again, the price is not derived from the futures; it's derived from the spot forex market. If you need data on that, also let me know. I can help you get that for free too. Anyways, Aussie dollar, okay, spot Aussie dollar, euro dollar, pound dollar, all these are going to be spot, so I don't have to repeat them all. And then you also have the non-USD based currency pairs like USD Canada, USD franc, USD yen, euro yen, pound yen. And you can't hedge on those with the market, right? Because the last five there, because they're not based in dollars. And what happens on Nadex, on the spreads? Every tick is worth $1. But you can hedge with the master spreads. All right, well, stay right there, folks. We'll be right back after this commercial break. Hopefully you're picking up some good stuff.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, wrapping up here. Hope y'all enjoyed that tutorial. I can do more of those. If you want more tutorials like that on the show, just let me know. You can email me, dmartin@tfnn.com, or just give me a call. I'll be happy to help teach you anything that you're trying to learn about Nadex and how it works. And markets all is quiet through the house right now. So not a creature is stirring right now. Waiting for this report to come out here in about 6 minutes. We'll see what kind of impact. It may not have an impact. I mean, it's a very important report. It's a very crucial report. So I'm just really curious. But I mean, the market really has went flat up to this point, and I'm just curious to watch and see what happens. S&P right now is down 6.5 points. We got the Russell down 7.9. We got NASDAQ still flat, up one tick right now. We got the Dow down 25. We got copper down 1.5% on the day. We got gold actually down 16 points now, pushing 1%. And we got silver down 0.517 at 1.5%. We got the natural gas is down 0.024, a little over 0.5% move right there. We got oil down 67 cents, about 0.75%. We got corn down $21. That's almost 3%. It's 2.75% right now. We got the soybeans down 24.5. That's a little over 1.5%. And we got the Aussie dollar. Let's see here. Aussie dollar is down 44 pips. Euro dollar is up 24 pips. Pound dollar is up 37 pips. U.S. franc is down 19. U.S. Canadian is up 15. And the U.S. yen is up 5 pips on the day. And do a quick wrap to so you know what's coming up this coming weekend and what we got going on that you need to be aware of. Do be aware that China is going to be releasing its CPI and PPI numbers on Sunday, 8:30 at night, Central Time. So that'll be coming out. That'll have an impact. It could easily have an impact on the markets going into Monday. And Australia. So it's going to have some home loans and new motor vehicle sales numbers coming out at 7:30. So the Nadex markets are open in time for you to be able to take advantage of some of the trades over there. And just depending upon what market you're trading. And then looking on over at Monday morning, we are going to be starting off strong with the core retail sales and retail sales. That's going to be coming out at 7:30 in the morning. And at the same time, we're going to have the Empire State Manufacturing Index. Then at 9 o'clock, we're going to lead into business inventory reports. And looks like Canada at 9:30 will be having their business outlook survey report coming out. And then we'll go into actually monetary policy meeting minutes in Australia over at 7:30. So you'll have some opportunity there in the evening again. Australia giving those trading opportunities throughout the day. Starting to see a little bit of a rally in the market, maybe some positive expectations, or could even be some weeks, right? On the number that came out. Now, I can't imagine a leak coming out on a news report early. But it's been known to happen once or twice. And let's see here. It's supposed to come out. Let's see. It'll be a Department of the Treasury website. If you want to be able to get that, that's going to be treasury.gov. And let's see here. Treasury.gov. And let's see the latest release. Let's see if I can get the link for that for you. Right here. All right. So we got to be seeing that report pop right up. And you just click on current issue. Okay. And that'll be released to get in the September number. And anyway, so, and the next one won't come out until November 7th, by the way, for watching for that report. Again, these are crucial reports on what's coming on up. All right. Well, I hope everybody has a great weekend, a safe weekend. Hope you've had a great weekend trading, and it's a new week next week. So everybody have a great day, a great time, and I will be catching you on Monday, 12 to 1 Central, 1 to 2 Eastern Time, right here on the Diagnostic Trading Hour. Stay tuned. We have some great stuff coming up for you right here on TFNN.com.